So shall we first of let's look at nice we're on 4 hours time frame, and we do like to see what the market is doing in a very serious way. So the first thing I want to point out here is what has happened on the floor. The price creates a structure from October 2024, broke that structure, came back to retest it. At this level, we have a structural deformation at this level. There's a structural deformation. I call it structural deformation. Build up of structure, structural deformation or break of structure. Now, price came back here to retest that same structure that was broken now as a supply roof, affirming a trend line. That trend line is slightly elevated. So when price returned again, it respected the structure again. And we return here to respect the structure, respected it again before the break of structure. And price came back to retest a broken supply roof as a demand floor. So this becomes your demand floor. So we're going to take it step by step, and we will ultimately see where this pair is going to. It's impossible for us not to know where market is going. It is very impossible. It's very, very impossible. So now, when you look left, you will find that price have created a double top structure here. A double top structure in the month of October 2024. If you look in your line chart, you're going to find a double top structure and a breakout from that double top structure. And this is the neckline. The neckline of that double structure is 27, um, that is 2777.693. Now, if the last time price tried to break that structure, it broke that neckline and returned, indicating that price is now following a new pattern. The market is uptrending. So we are looking for uptrend structure. So on technical, we decided to keep that level because that level was a horizontal support structure. When price upswing broke the structure, it returned here to respect it, bought further into a new all-time high, then dropped. So that was why we introduced that structure. Ordinarily, I would have just discard it, but at the moment, I include it in what we are doing because of what that level did. So at that level, you see price return there to respect that structure, and the reason we are keeping it is because we believe that when price tap into 2,789.053, there will be a reaction. That reaction might be a 50 pip or 60 pip reaction. Then market will upswing again to break that supply roof. So at this level, we have two key supply roof, 2,789.053 and 2,777.693. 2,693, 2,777.693 was a previous demand floor. That structure is broken. Yes, we messed the structure up last time when we came there, and price is at that level and is contesting it. We want a break and close above that level. Break and close above that level, we ultimately push price into our current all-time high, 2,789.05, approximately whole number 2,790,000. So this is what we expect. So if that structure is broken, we want to see a break and close of a 4 hours candle to make sure that on 4 hours, the body of the candle breaks the structure. A break above that level ultimately opens our mind to add more before we look for a sell opportunity. Now, while we have this intact, now we want to see that we have an ascending trend line. Our ascending trend line also have another clean price action. We have price create here, a demand floor, price create here, demand floor, price create here, demand floor. Before a break of structure, there's a structural destruction, structural deformation at this level. A break of structure followed by a retest. After that, the market have continued to upswing, moving in a way that it's just creating series of higher high, higher low. You can see what the market is doing. Market started creating higher high, higher low, 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 higher high, higher low. Now the new higher high is going to be at this level. So you're expecting a push into 2,800 plus. So while I look at 2,811 as a possible sell structure, it's because of this trend line. This becomes an institutional trend line. The last time price returned on this structure, it was a very big and a massive buy. If you look at the structure, you will see what price have done here, a heavy buy. Price return here, a heavy buy. And on break of structure, a heavy sell. And we return to that structure, heavy sell. If price return to this level, there is a probability there will be an institutional rejection at that level. There's a very high probability that we will have institutional rejection at that level when price returns to that level. And a return into that level will be an ultimate break of the previous high. 2,789.053 will be smashed if price gets into that level. And what does this mean? That price can break out from that structure. When it returns, it will use 2,789.053 as a demand floor, indicating that gold might continue to uptrend. So while we retail traders are complaining that the price of gold is too much, institutional traders are investing their money. So that means they may take gold to 3,000, they may take gold to 5,000. Nobody knows. Because the gold acquisition is a big man form of investment, a form of hedge, diversify, save money. Central banks are buying, big firms are buying. So at the moment, no one can tell. So what we are trying to interpret is the structure of the market and to look at it holistically and let it do its worst. One thing we have learned in this space is to be very rugged and allow market to do its worst. So when you make analysis, you allow it and see it if it will play out or not. If it doesn't play out, you learn a lesson and improve. So on technical, this is what we see. On technical, this is 4 hours time, and yesterday was very nice. That call at 2,747, 2,748 was a nice call. You go check my what, go watch my YouTube, go watch my TikTok. I spoke about it, and it feels good to see price return and react at that level and respected the analysis. That feels good. And when we look again, we have a long-term ascending trend line. You can see. So for those who are confused how we manage to draw our trend, go watch my videos, and practice. As time goes on, when you draw one line will represent a trend, and you add a zone, and market reacts. You're going to see it. So the market is uptrending, providing the demand floor as a buy impetus. So now in the future, what you are looking for is a breakout of that structure. So if we have a clear candle breakout from this structure, it will ultimately meet a retest and we sell down to this structure where we started. So the trade is now balanced. The trade is now balanced now. So if we have a breakout from that structure, that would be a good time. But I will tell you for now, there's a very high probability that gold will continue to uptrend. Now you look at our trend line. Our trend line starting from the month of January '07, the 7th day of January, you see price creating here a demand floor at this level, creating here a demand floor, create here another demand floor, create here another demand floor, and ultimately came back to retest it yesterday by after a series of monetary policy decision. It couldn't really do much for the market, and the market continues to go up in the direction of the trend. And you have seen price returning to 2,745 ultimately entered our zone in the zone of 2,747, and we had that buy trigger in that rate. That buy trigger is still running. So what we see is that price will continue to upswing until we hit a 2,811 mark, where this ascending trend line will be complete. Let me change the color. I want to change the color to black. So if you see this color price into this black zone, you know what to do. You know what to do if you see it at that level. You know what to do at that level when you see it. So I've given you a free idea, a free idea. We are not influencers. We just do this to show you our strategy. That is all we are doing in the market. We just show you our strategy. So I'll tell you where the market is coming to, and let's see if it comes here or not. A lot of traders are not aware of what is about to happen, but I'm also sharing with you for free because I know this is what will happen. I'm convinced 100%. So trade with caution. Risk management is everything. Don't over leverage. Don't over leverage. Focus on the knowledge. Focus on the key learning. That is all you need at the moment. So you see, I've outlined the possible areas of market reaction. So if that happens, that will be a good time. That will be a good time. So let me also add more flavor to this. On aggressive sell structure, this is where the market is coming to an aggressive. This is my aggressive sell structure. This is my aggressive sell structure. My aggressive sell structure is well detailed, well explanatory. It provided a consistent supply route to upswing, thereby pushing price down. And I believe that price will tap into that structure and provide a sell impetus. So you see here, price returns here. Now I want to change the color of this structure to red. So it represents sell. So if you see price in this direction, you see gold sell in the zone of 2,818, 2,817. They tap into that structure, will represent that figure, where you look for a potential bearish correction and we will continue with the trend. All we are watching our litmus test for this on 4 hours is to see that price does not break out from this ascending trend line. A breakout from this ascending trend line is the end of the rally. I know it sounds very funny, right? But now I have confirmed it. So let me also bring my structure very close. So you stay guided. So if you draw your own chart, I will tell you what you are going to do. You are looking for breakout of a body of a 4 hours candle close. That is what you are looking for. Forget about the weeks. Forget about the weeks. The weeks are not important. What you are looking for is a breakout of a 4 hours body candle. If 4 hours body candle ever breaks out from this ascending trend line, acting as a dynamic support, the market becomes bearish. Automatically it's setting up for sell. So what this means is that in the future, if it's not now, tomorrow or next tomorrow, anytime you see price ever break out here, 4 hours candle, break out from this structure, it will go for a retest and come down here, close to 2,700 mark, where we have a potential buy floor. So that area remains a potential buy floor zone. And if price comes there, I want to see a reaction at that level. So this is what I want to see. So if price returns to this level, this will be an area of liquidity where there is smart money waiting. The reason is because institutional traders who brought the money that gave us this opportunity will be waiting at that level. After they have created series of structure, you see price creating here demand floor, break of a demand structure, price returns here on supply, supply roof 2, supply roof 3, supply roof 4, supply rule 5 and break of structure, and price returns here on demand. So this is a demand floor. A previous supply rule becomes a demand floor. So on technical, if price returns to this level, that will be a good time to look for a buy opportunity to buy back in the zone of 2,727 into 2,720. In fact, the reaction might extend up to 23. And a break below this structure will ultimately mean that price is now respecting the impulse leg that broke out from the ascending trend line, indicating that take profit is just the next alternative. And if that happens, I will continue to have a strong bearish drop. Then our next trade idea is going to be on this breakout of structure, where we have a clean breakout and followed by a close retest. So at this level, if market continues to move down, I want to see price return to this level where I will look out for potential buy opportunity to buy back in line with the current price action. So it feels good to see that that buying is not stopping anytime soon. That buying is not stopping anytime soon. It has no plan to stop. Now it has edged into 2,780. It will continue until we retest. Now you see that neckline is broken. So the next thing I want to see is a retest of the last high. So the next thing we see is that the price might likely now come back into 2,800 and 884 into 85, then you look for correction from that level. So there's a very high probability that at 82, 83, 84, you could potentially be seeing some changes in the direction of trade. So this is what we have for now. SAU is aggressively doing its work. That shows the liquidity in the gold market. The liquidity in the gold market is bigger than anybody. So trade with caution at all time.